What is going on, SoFi fans? Welcome back to Financial Journey. Plain and simple, it's been a rough week for SoFi investors. There's been a lot of negative news that's been floating around, which resulted in 2 negative analyst downgrades and also a little bit more of a 52-week low. So it does suck, plain and simple. But on an optimistic standpoint, I want to talk why it might be very positive next week, coming from SoFi's operations and also from economic data. So I'm going to be talking about both. Before I get into any of that, make sure you guys hit that thumbs up and subscribe. Always greatly appreciated. And with that, let's get right to it. So if you are curious on exactly what is plaguing SoFi and to what degree on dollar value exact, I did do a video on that. I'll put that in the description below. But like I said, those negative actions did result in us getting 2 negative analyst downgrades, one of which was from Wedbush and the other one from Mizuho. It's odd to see Mizuho because for the most part, they're fairly optimistic on SoFi based on all their questions from our earnings. But as you can see, Mizuho did reduce us from $7 to $6 as far as a price target, and Wedbush was $8 to $6. So clearly not that optimistic. And in my opinion, these analysts don't necessarily look at a lot of the data. For instance, our Q3 earnings were absolutely amazing, as I've said in many other videos. But if you do look at the other data behind the scenes, it is still equally positive. And what I mean by that is this. So for instance, the return on assets and return on common equity is all going down. In general, all the return on everything, even equity, everything is going down, showing that they're being more efficient. They're, in general, being a better company. That's exactly what you want to look for coming from an investor standpoint. So even though tentatively it is still negative, we already know SoFi isn't profitable, net profitable as of right now. I do believe it most likely will be early 2024. But once again, I personally feel, which I'm not a financial advisor or anything, these analysts do not actually look at a lot of the data behind the scenes. So this is just profitability. On the multiple standpoint, I always like to look at the book value. So when I'm looking for and scanning through companies, I like to look at their price to book. And you can see if on SoFi's case, based on their recent earnings, it shows a multiple of 1, insinuating they are exactly at their intrinsic value. So we are at a crazy discount considering everything in the market has a higher multiple than 1, plain and simple. So SoFi, as Anthony's even said, has been suppressed. It's just market is not really reacting to it. And obviously in SoFi's case as well, we also have shorts, which do feed largely off of negative news. And with SoFi, there's been a lot of negative news that's been floating around, like I said, this last week. So SoFi's shorts have been having a field day. So again, let me know your thoughts on that. I want to start by talking about some economic data that is coming out next week that should be fairly optimistic. So as far as what is coming out next week, for the most part, Monday and Tuesday is fairly normal, nothing really abnormal those days, kicking it off on Wednesday. So we do know that SoFi is very linked to consumers, very much so. And the fact is, there's 2 data points coming out this week that will definitely verify about the consumers, if they're still out there having their jobs, still making the money. So for instance, on Wednesday, we do have ADP, non-farm employment change. Forecast being 200,000, previous was 239. So once again, if this is very much positive, SoFi is going to go on a very good rally, especially if you do piggyback that off of the technicals, which are showing very oversold. So in addition to the non-farm employment change, there's also GDP that's coming out, which could cause a little bit more volatility, hopefully in a positive format as well. Thursday, we do have PCE. And so PCE is typically used by the feds to determine interest rates. So this one is going to be very heavily sought after or looked at, in my opinion. And then Friday, we have the actual non-farm payroll, which is 200,000 as far as the forecast, 261 as the previous data. So once again, 2 actual data points coming out next week linked to consumers. So hopefully with that, SoFi might be able to get out of this rut. In addition to that though, SoFi potentially, based on rumors, of course, rumors is floating around all the time, and I'm not a financial advisor, these videos are for entertainment purposes only, but the rumor is that on November 28th, options is going to be launched. And so as I've said in the past, that in and among itself is very good. That will bring a whole new level of revenue to SoFi and hopefully to counteract that student debt getting extended. But even looking at Robinhood, based on their previous earnings and so forth, it does look like in 2021, 1.81 billion in revenue was generated primarily through options activity. And of course, there's broken down between options and crypto in this actual figure right here, but obviously majority of which is from options. Options hands down is the most profitable asset aspect of trading, coming from a broker standpoint. So once again, this is very beneficial for SoFi. In my opinion, if they were just to launch options trading, that probably wouldn't be enough to get us out of this rut. But this, with combination of the economic data that is coming out, that will be enough, in my opinion, to get us out of this rut. And like I said, when it comes down to the economic data, we are very oversold. So looking at stochastic, it is at 6. That is very, very low. In addition, momentum number retail investors, for the most part, are fairly flat, but we are still below 0, so theoretically we are losing buyers, and so that's something just to watch for. Lower percentile of the Bollinger Band, and hypothetically we are on day 4 of potentially being below that $5 mark, and like I've said in previous videos, we are going to be considered an official penny stock after 10 consecutive days below the $5 mark, on which, if that does hold out to be true, then that ultimately means that a lot of institutions can't hold SoFi on margin and on certain accounts. Some people have said that's incorrect, but if you do, let me know in the comments below. I'll be more than happy to send you all the necessary links to kind of validate that. But still, it's one of those situations that even if potentially we do a reverse stock split, I know this is a little bit more of a side tangent and wasn't necessarily what I wanted to talk on, but I do see, oddly enough, a lot of people talking about reverse stock split, saying they're going to sell if SoFi ever does that. Keep in mind, at the end of the day, looking at SoFi right here, the market cap is currently 4.27 billion. If they do a reverse stock split, or if they do 10 reverse stock splits, or even just regular splits, doesn't matter. The market cap stays the exact same. What changes fundamentally is the stock price and also the outstanding shares. So in theory, if you have $1,000 in SoFi, after a reverse stock split, you're still going to have $1,000 theoretically. So once again, a lot of people are very worried about a reverse stock split, but in the grand scheme of things, I think it is going to be for the better potentially. So let me know your thoughts on all of that, and as well, let me know your thoughts on the options activity, and if you are very optimistic about that, or if you just see it as whatever yesterday's news or whatever it might be. But let me know your thoughts on that. Hopefully everyone's having an amazing weekend. Don't forget to hit that thumbs up, subscribe, do all that fun stuff. I always greatly appreciate that. And with that, let's all make a lot of money on SoFi.